the buyers and sellers at that level must be retested. So the market moves to the path of the least resistance, right? This gap shows strength, but we have to retest the strength again, pretty much right here and here. So it comes up and retests, and then it makes a new high.
So in this example, because I'm looking, there's like those two like huge candles side by side.
This,
Yeah, yeah.
yep,
And so that was caused by something,
it's pretty much
and you're
an order block where sellers have come down and then the buyers have instantly stepped in and it wants to be retested.
yeah. So the buyers have instantly bought in, and so the price goes back up. Are you saying that the market makers won't just let the buyers just keep going up? They want to go and
So
retest those
having
buyers.
having retest as confirmation to your bias, right? So it helps your trading strategy and helps you pinpoint where to place stop losses and take profits. And I'll show you
Hmm.
this once this plays out as well. Because now that this has been swept, I can assume that these lows will be protected, right? And I'll explain what that means in a bit.
Yep.
And moving on to the next part, so flip zones, liquidity, market structure breaks, and sweeps. We're gonna go on to talk about market structure breaks, right? Pretty
Hmm.
much when a major level gets broken out of, that's a break in the market. So
Yep.
this proves that the market is currently bullish at this point. Once this breaks, right, you get a break to this next sweep. And like my point before was, why does this sweep happen? Well, this sweep just tests the buyers, tested this
Hmm.
area again, and now we're holding above a flip zone, which is bullish, right?
Mm.
What we're looking for now is a retest of this exact same flip zone. And I
Hmm.
keep going back to this, but it's just so much easier to follow along. But this flip zone had to be retested again, right?
Yep.
So the two gaps, I
So,
mean the two levels creates a gap, retest. And then back
so
to here.
breaks up out of that flip zone, you long. If it breaks down below that flip zone, you short. Is that kind of the basic strategy?
Yeah, but you now the price action is already bullish, so we're leaning bullish. So that's our bias. Our bias right now is bullish, right?
Okay.
We'll let the chart play out to see what happens. And we get a test right into that tap,
Yeah, only a
right?
little one.
So we tapped, and then now we have this level right here, right? That's testing out. So what we're looking for is another market structure break, just like this, right? Another example of market structure break is what I'm about to show you. So
Mm-hmm.
once we see this market structure break, just like what happened last time, and just like what happened on ETH, once
Hmm.
structure breaks, it is confirmation to go up. So this
Hmm.
separates a trader that gambles and randomly longs ETH out of nowhere, and a trader that
Hmm.
knows what he's doing and takes calculated risks.
Yeah, I want to be the latter.
Yeah, definitely. So we're waiting to see a reaction off of this. We had a healthy bounce above the flip zone,
Hmm.
so we're waiting for a break above. We don't get it yet, so we need more confirmation. Now we finally get a breakthrough. Okay,
Okay.
if we do long this, where do we place our stop loss? Right below the flip zone. The stop loss is pretty much an invalidation point.
Mm-hmm.
So we target the liquidity. Okay, that's the liquidity is where the stop losses are at and where the
Hmm.
market wants to completely rinse again. Retail must always lose. You can't let retail win.
Hmm.
Okay? So yeah, we get this test through. Okay, now market structure has broken. As soon as market structure breaks, as a trader, what you can do, right, is move your stop losses to break even. So you're moving your stop losses up, right, so that now it's a risk-free trade, and if it does hit break even, then you're completely safe. This in the NFTs examples, if you like buy Moonbirds at do you buy two Moonbirds at 10 ETH, sell one
Mm.
Moonbird at 20 ETH, now you're break even no matter what happens. You can go to zero and
Yeah.
you'll be fine, right?
Yeah. And the reason why we're comfortable doing this is because it's broken out so much. The likelihood of it just like crashing back down to 65 is just so unlikely. So we can just move our
Yeah,
stop loss
and if
right.
it does crash back down, we can literally just re-enter into another position. So from
Yeah.
there, it's just a clean break to the upside, and it takes a while to play out because it's always retest. As you can see right here, it's literally just pattern recognition at this point. Once there's a break here, it creates a gap that gets filled. And you see how this is a major imbalance? All these candles keep constantly retesting each other, right?
Yeah.
But this one doesn't have that retest. But this one manages to get filled. There's a reason why it feels there because it needs to test the buyers again.
Mm.
But that being said, once the liquidity taps, we typically see rejection. So every time the liquidity taps, right, price has to pull back every time. No matter how minimal it is, it always pulls back.